All right. All right. Here we go. This is our Friday weekly podcast. Believe it or not, ladies and gentlemen, this is episode number 81 of the 5 Year Real Estate Career. I want to welcome everybody, both live and those of you that listen to this later on. This has been Veterans Week, and in honor of that whole topic, which we'll get into more, but we're going to talk about our theme today is military to real estate millionaire. And did you know that a veteran could buy a 2 to 4 unit property with zero down, making them one of the most powerful partners in real estate? So agents, perk up and listen to this because this is really important. Did you know actually if you have a husband and wife, they can buy a 6 unit, again, zero down payment. Did you know that the VA loan can be used not just once, but multiple times over a lifetime? And that can create repeatable wealth building opportunities. In fact, another thing that most real estate brokers, in fact, most mortgage brokers don't know some of the things we're going to be sharing with you today. And another thing that many of them don't know, did you know that you can actually have two VA loans at the same time? Yep, there's a way to do that as well. And we're going to teach you all that today. And did you know that you can legally and strategically partner, even if you're not a veteran? So for those of you agents out there that have veteran partners and civilian partners, clients that you can actually put together, so you can strategically partner with a veteran to build a real estate portfolio, even if one of the parties is not a veteran. And let me just add one more thing because, well, I'll get to it in a little bit. But why is all of this important? First of all, agents are leaving a lot of money on the table, not working with veterans. Okay. And it's not just veterans, it's active service duty members who are active right now. One of the biggest misconceptions, and sad when I hear it, when someone says, oh, I didn't use that VA loan opportunity because I'm still active duty. And I go, and it's still for you. Did you know that many agents have no clue at all? In fact, they're afraid to learn more about the VA and how the VA loan works. So this is a great niche, especially if you live in certain markets where there are a lot of military. But I'll tell you, there's military everywhere. There's military and there's veterans everywhere. Remember, when they retire and they're veterans, they can live anywhere. So welcome again to episode number 81 of the 5 Year Career Podcast. Today's topic is military to real estate millionaire. And imagine, if you can, a real estate business that creates quality, consistent, exclusive leads and allows you to create a business that in 5 short years will pay you abundantly for the rest of your life. I know it sounds like hype and it sounds too good to be true, but it is true. So here's what we're going to talk about. 5 years to financial freedom. It all starts with leads, the lifeblood of any business. By the way, you can always catch this episode or this YouTube channel at youtube.com/at 5 year career. That's anywhere in YouTube. Just get on there /at 5 year career. After all, a great business. Isn't that what we all want? And today we're going to cover this and a whole bunch more. But before I get started, I want to introduce to you my partner, my longtime friend, an entrepreneur, a fanatical marketer, as many people call him. He's been around for a few days, and he's also been around in this industry for a minute or two. He has started real estate franchises, ERA, for those of you who know that. He started a mortgage company that at one time was doing over $1 billion in business and was in 47 or 48 states, if I'm not mistaken. And today he dedicates his time to training real estate agents nationwide. Let me introduce Mr. Skip Wiley.
Thank you for that. When you described me, I wondered who you were talking about, but thanks for those amazing compliments. Hey, I'm honored each week to be on this call with Eric. I've known Eric and Patrick and other people who are and Andrew for over 25 years. And how do we meet? We met the same way that I meet every person in the world, with a purpose to serve other people. And on today's call, I have with me my co-host each week, which is Eric Wilner. And Eric has the longest running radio show in the country. That's it. It's called The Real Estate Show. And he's the brains behind the business that we operate here. So bottom line, Eric, let's get right into our presentation. And we're going to talk about the 10 reasons why your next real estate partner should be a veteran. And the first topic that we want to address, on this call is the zero down payment benefit. So this morning, as I got up and I did a little research, here's what I discovered. I thought we lived in a county where the average price range, and I do. I live today in Escambia County, right next door to Santa Rosa County. So did you know that in my county, which the median price range is under 400,000, it's actually right around 330, that I can buy VA benefit up to $806,000. Actually, I learned something even more important this morning. There is no limit for VA in any county in America today if the veteran qualifies for a single family residence. They took away the max benefit. It's all about qualification. But here's the big topic for today. We're talking about buying your first property. Now, imagine this. You're a veteran. You just moved here from a duty station to Pensacola. Do you know that you can buy a duplex in Pensacola, Florida, with a 2-unit duplex for $1 million? A fourplex, $1,550,000. And again, that what it says in VA, it's 806. But here's the bottom line. How much money do you need to buy that fourplex up to $1.5 million? Well, if you're a young man and you come here and you buy that duplex, we're going to talk about the other great pieces that surround the VA loan. You could be here for 2 years on your duty station, walk away to another city and have the best investment real estate you could ever buy in your entire life. What's your comment about that, Eric?
You know, it's such, I was on my radio show telling people that the VA loan is in the top 3, okay, of all investment vehicles out there. It's one of the best tools that there is to set yourself up for the future. And, as you were talking about, a veteran can buy up to 4 units with zero down. So for all of you people out there, well, there's people who don't have money or they don't have a down payment. That is not the excuse. In fact, it rarely really is. But for a veteran in particular, that's a huge, huge thing. And the other thing that we were just talking about, if you get transferred, right, you could take a VA loan. And let's say that you bought a VA loan today, a $400,000 property, which is, let's say, the national average. Do you know that you have $806,000 of eligibility? So if you bought that 400, you don't have to do anything with that loan. You still have 406,000 of eligibility, and you could go buy a second home or buy the next home in your next duty. So these are things that most brokers don't know and will make you a go-to source. And by the way, military buyers are great buyers. They're loyal, they're disciplined, they're focused. So let's go to reason number 2. So zero down payment. We could go on about that for hours, literally, and all the things that you can do with it and what it could mean. If we did the numbers and showed that if a young serviceman bought his first property, kept that property, and then kept house hacking along the way, or and adding units along the way with his VA eligibility, he could have millions of dollars. And that's why, this week on the radio show, I've been talking about from military to real estate millionaire. Another big advantage, reason number two, is no PMI. What's PMI? Private mortgage insurance. And that is insurance, by the way, for the lender, not for the borrower, in the event of some sort of a default. But you see, the government automatically, for veterans, and deservedly so, guarantees the loan, the first 25% of the loan. So there's no need for PMI, because PMI is usually required when someone puts less than 20% down. So PMI can eat up anywhere from $300 to $700 per month in cash flow. That goes right back into your pocket. VA loans eliminate PMI entirely, creating more profitability, more affordability from day one. Let me jump into reason number three. PMI can better interest rates. That's right. Not only do you get to put zero down, not have to pay PMI, but you also get better rates than normal conventional rates. See, a lot of people don't know that. And a lot of even mortgage brokers shy away from what they think is more complicated, and it isn't. But VA loans consistently offer lower rates even than FHA or conventional loans. And that's why a partnership with a veteran could lead to some very interesting opportunities, and you can enjoy better monthly cash flow and higher long-term returns. Skip, it looked like you were raising your hand.
Yeah. I took the liberty this morning before this call to look up the current best rate that I could find for a VA loan. Now, remember, we're buying this to live in it, but we're down the road going to move out of it. Let's say we lived in it for a year and decided to move out of it. Well, the best interest rate you're going to find for an investor first is 20% down and a rate of 7%, maybe 6.75% today with points. But I looked this morning, and on a VA loan, zero down. Remember, you're buying it, you have to live in it for at least a year. But the rate today was 5.3 to 5.5. Now, imagine, Eric, that all of your investment properties that you own had a rate of 5.3, 5.5 without PMI on it. Would that change your return on investment?
Come on, Skip, don't tease me that way.
Absolutely, it would. Hey, so the next item on here, too, while I'm going on a roll here, is flexible underwriting. Now, I was in the mortgage business for close to 25 years. And here's what I discovered about working with a veteran. On average, most veterans will qualify at 50% back end ratio. That's higher than Fannie and Freddie. But here's some transactions that I have personally done. If someone has a lot of money in reserve in their bank account, I have seen VA approve 60% or more for a back-end ratio on a mortgage loan. So in essence, in simple layman's language, a person can absolutely qualify easier, faster, and better with VA because VA is trying to serve the veteran and make sure that the veteran gets what they want. But what about multi-unit wealth building? That's more in your line here. So speak to that.
Yeah, I love that concept, because if you really think about it, first of all, we've already dispelled the down payment is the obstacle. Well, then sometimes I'll hear a veteran say that, he can't really afford it in this market. When you get a multi-unit, and that's why this is such a neat and huge opportunity, a veteran could buy a 1 unit, but they could also buy a 2 unit, a 3 unit, a 4 unit. And as I mentioned, if they have a military spouse, all the way up to a 6 unit. Imagine that if you had a 4 unit, the veteran lived in 1 unit and had 3 tenants paying market rent, which chances are will not only pay 3/4 of the mortgage payment, in some cases may pay all of the mortgage payment, in which case a veteran could live payment free, down payment free, PMI free. You know, I'm starting to see a theme and a theme of freedom build up for the veteran who, by the way, put in the service to protect our country. They should also get a piece of the country and a little piece of dirt here along the way. So that's about the multi-unit. So all of this kind of falls into the category of reason number 6 also is house hacking. Skip mentioned that you just need to live in it for 1 year and you can move out and then buy another property, then buy another property, and then buy another property. Think about that. If you could, with 0 down, buy another property every year, what kind of an advantage would that be in building up a portfolio? One partner lives in the property, the veteran, while the other partner, if a civilian decides to partner up, you can rent additional rooms, you can rent additional units. It's instant income and instant financial leverage. Again, one of the best financial tools out there. Skip, let's talk about the closing costs, because 0 down doesn't mean no out of pocket. You're muted, Skip. Skip, you're muted.
That's really good. Thank you. Hey, Eric, bottom line is, how about 0 closing costs? In today's market, in all cities around Florida, sales have slowed down. It's very, very, very likely that it's going to be easy for me to have a veteran who wants to buy at the highest price. Oftentimes in real estate, what you tell your buyers to do is negotiate the sales price. But is that really the best thing for the buyer? In many cases, it's not. If you pay full price, but you get somebody to pay all of your closing costs, that may be a better situation. So oftentimes when I'm working with a veteran, I suggest to them, we may not offer a dramatically lower price, but if you could get into this property with zero, including the closing costs out of your pocket, would that be better for you? And 9 out of 10 veterans will say yes to that offer. We're not telling them to overpay. We're simply telling them to negotiate the closing costs into the transaction. But what are the closing costs? Roughly on a VA transaction, if the veteran is forced to pay the closing costs, it's going to be about 4%, 4% of the loan amount. But I will tell you this, I've done tons of VA loans. 90% of the time, I ask the seller to pick up a portion of those closing costs, maybe even all of those closing costs. And the reality is the buyer can buy up to 1.5 million on a fourplex in Pensacola, Florida, with not a dime out of their pocket. And I do have one other topic to bring up that's really critical. And that is, what happens if you buy that fourplex? And if you buy the fourplex and it has 3 tenants in it, will those tenants help you qualify for that purchase? And the answer is absolutely yes. A standard is they want to document that the tenants have a lease. They want to document that the tenant.
You muted yourself again, Skip. You're still muted, Skip. Skip.
Okay, are you ready?
You're mute. Yeah, okay, now you're unmuted.
Hey, I'm really sorry. New computer. But hey, bottom line, this is a small group today. It's just us, so it really doesn't matter. But here's the bottom line. Veterans, if you buy a fourplex and that fourplex happen to have 3 tenants, they will take 75% of the rental income and give that to you as if you were earning it, even though you're just buying that unit. So that's income that will help you qualify. That's an amazing benefit. They will want to document two things. They'll want to document that there's a lease. They'll also want to document that the prior owner can prove that income. And if he can do those two things, they will give you 75%, which is a lot of money that will help you qualify for that fourplex. Eric, back to you.
Yeah, good stuff. And one other thing, we've given you a bunch of nuggets that I guarantee you that most mortgage brokers don't even know about VA loans. And here's another one. You talk about closing costs and and most loans have a limit on how much a seller can contribute, right? In the VA loans case is 4%. But that's only towards closing costs. You know that the VA loan also allows people to contribute other things like repair costs and prepaid interest and things like that. So it's kind of interesting that if someone really understands and knows that product, there's a lot that you can do. So that was reason number 7, the low closing costs and a great broker, which I hope you will be after you listen to our podcast. You'll negotiate the best deal for your clients, including the closing costs. As the automatic landlord, I'm always looking at ways to help build a portfolio. And with proper planning, veterans can move out after a certain occupancy. The safe number we can say is 12 months. You can move as many times and repeat the process as many times as possible. And there are ways to do it sooner also, believe it or not. And you can convert the property that was your primary residence, because that's VA loans are only issued as a primary resident loan. But what if you can move out? Then you can make that a rental property and then go out and get a new primary residence. It's a repeatable strategy. It's a scalable strategy to build a scalable portfolio. And then reason number 9 is cash out refinance advantage. Okay. This is where I know a lot of people criticize using your home as an ATM machine. Let me just tell you that the VA cash out refinance unlocks access to equity tax-free. That's right. Whenever you take money out on a refinance, regardless of the type of loan, that's tax-free money, which you can use hopefully to reinvest or for other investment purposes. But this can fund the next deal. It can fund renovations. It can fund expansion of the partnership portfolio. And here's the cool part about that is that the VA refinance is what's called a streamline, often requires no appraisal, may not require verification of income again. It's a very quick. So, the old saying that I'm sure you've heard a lot of people say, right? Marry the house, date the rate. Well, for a veteran, it's even better because it's easier and cheaper when it comes time, if it's worth it to refinance, to go ahead and, hate the pun, pull the trigger. Back to you, Skip.
Well, I think that's an excellent point. And I'll give you one circumstances that happened to me. A Navy guy bought a triplex from me. He was restationed 4 months after he bought that unit. Didn't stay in it for 12 months. Went to his new duty station. Had the best investment property this young man has ever experienced or will ever experience, because he bought it at a time where the rate was around 4%. What can I say? He'll never buy another piece of investment real estate with zero down. All the closing costs were paid by the seller, 4% rate, forced to move because he was restationed, and he now has this great investment that he will never sell if he's smart. Bottom line. So those are the primary things that we want to talk about. But here's the real thing. If you're working with veterans, veterans are quite easy to work with. Surprisingly, they have better credit scores. They manage their finances better. And what we want to do today and on every one of our calls is we want to teach you the benefits the niches that are out there in the marketplace so you can create more relationships with the people in that niche, and also can help you create more real estate sales. So the bottom line is, I always say this and I'll say it forever: visibility equals profitability. We know something today that many people do not know. They don't know all these little intricacies that are around the VA loan. You know them now. But if you put a candle under a basket, that light will not shine. It'll shine under the basket, but nowhere else. So the truth of the matter is, what you get on each of our podcasts are conversations that you must have with people. I have one rule of thumb of life, and that rule of thumb is network, educate. It's actually a couple of things built into that comment, but you really got to talk to people. I will tell you, I'm not a fancy guy. I'm not the smartest guy in the world, but I'm really good at just being me with the people that I meet. And if you can just be you and enlighten them, educate them, help them rather than sell them, you will build a successful business. And if you want to be part of our what I call the 12 closing club, all you have to do is educate people. Back to you.
Yeah. In fact, we have a done for you component of our program as well. We've discussed on many of our episodes, the one to many approach, the ability to market from, one time to many people at the same time. There's no better system out there for starting or increasing and scaling a business than using webinars, right? I could go down a whole long list of why, but a lot of times people get tripped up with the technology, they get tripped up with the logistics or just the complication. We have a done for you service. You don't need to do the webinars yourself. You can leverage ours. And so we invite you to check that out right here. There's information down here below. You can also go to our website, which is the 5yearrealestatecareer.com. Skip, I want to thank you for your input and your participation. I want to thank all of our listeners and the followers who listen to our program. Thanks for joining us and letting us share. Thank you so much for joining the 5-Year Career Real Estate Podcast. We hope you enjoyed today's episode. If you liked what you heard, don't forget to subscribe down here below so that you find out more about our next podcast. Rate us, comment, leave a review. We love your positive, constructive feedback. Your feedback means the world to us. So stay tuned for more exciting content every single week in our upcoming episodes. Follow us on YouTube and watch out for some behind the scenes and some additional stuff, maybe some clips from my radio show as well. And remember, don't just listen. Use this information to build your own 5-year career. It's entirely possible. Again, visit us at youtube.com/@5-year career. Like us, follow us, and we'll see you again next time. Bye-bye.